Hey guys, Namaskar. Welcome to the batch of Indirect Tax, GST and Customs for CA, CS and CMA final. This is a batch which is recorded specifically for South Indian students. Pure English batch. Sarkar, as far as Indirect Tax is concerned, as far as your syllabus is concerned, GST and Customs laws we are going to cover because these are covered in your syllabus. And sir, we are going to cover each and every topic in a very beautiful manner. So what you'll have to do, you'll have to just concentrate whatever I am saying, and we'll have to cover each and every topic in a very conceptual manner. Sarkar, first of all, indirect tax. Indirect tax is a tax which is charged on goods and services. Sir, this is a tax which is charged on transactions. Whatever transactions you are, taking, you are incurring, all the transactions which are taking place of goods and services, it is being levied. Sir, goods and services tax, GST, one of the most important topic in India. And in the independent India, the most important economic reform which happened was introduction of GST with effect from 1st of July 2017. So we are going to cover GST and customs laws in these lectures. Sir, we'll begin with the GST, goods and services tax. Sir, you know very well that with effect from 1st of July 2017, which is celebrated as CA Day, which is also now celebrated as GST Day. And if you don't understand the GST, then it is Doctor's Day also. So sir, let's begin with indirect tax. Sir, we'll begin with the GST, goods and services tax. First of all, we need to understand what all taxes got subsumed in GST. With effect from 1st of July, many of the state taxes, many of the central government taxes got subsumed in GST. So first of all, we'll begin with what all taxes got subsumed in GST, and then we'll start with the concept behind introducing the GST and provisions regarding GST. Sir, these are the taxes which are subsumed in GST. It is already given in your book. Sir, first of all, what all central levies got subsumed? Central excise duty. Central excise duty and additional excise duty which was levied on manufacture of the goods. Then service tax which was levied on services. Excise duty under Medicinal and Toilet Preparations Act. CVD means countervailing duty, and special CVD means, sir, it was levied on import of goods as special additional duty which was equivalent to weight, which was called special CVD, special countervailing duty. Sir, customs duty is not subsumed. I repeat, customs duty is still charged it is not subsumed. These are additional custom duty which are called countervailing duties. These are subsumed because these were equivalent to excise and weight, and excise and weight got subsumed in GST. So these got also subsumed in GST. Then CST, central sales tax, which was levied on interstate sale of goods. Then surcharges and cesses insofar as they relate to supply of goods and services. These are the central taxes which got subsumed in GST. Now, not only central taxes, but yes, state taxes also got subsumed in GST. Now, what all state taxes got subsumed in GST? We are going to see. Sir, first, state surcharges and cesses insofar as they relate to supply of goods and services. Okay. Then, entertainment tax. Sir, on movies, etc. Entertainment tax was levied. Sir, except those levied by local bodies, because you know, local taxes, local bodies which are charging, not got subsumed in GST. Only central government and state government taxes got subsumed in GST. Then, taxes on lottery, betting and gambling. Sir, lottery, betting and gambling. Sir, taxes are separately charged, and these were the revenue of state government. These also got subsumed in GST. Sir, entry tax, all forms and purchase tax. Then weight and sales tax. One of the major revenue of the state government was weight and sales tax, which got subsumed in GST. Then luxury tax, taxes on advertisements. These are all taxes which got subsumed in GST. But sir, all the taxes which are levied by central government and state government are not subsumed. Like, for example, customs duty is not subsumed. State government has revenue of stamp duty. Sir, toll tax, road taxes. Sir, there are some other taxes also which are not subsumed in GST. Okay, so these are the list of taxes which got subsumed in GST. These are many central taxes and state taxes which are the major revenue of the state government and central government. This got subsumed in GST. Now, one question will come in our mind. Sir, okay, these all taxes got subsumed in GST, agreed, but why? Sir, what was the reason? What was the need for such a great economic reform? Why it was required? What was the lacuna behind the earlier laws? Sir, so we'll be taking a basic example and we'll try to understand why these taxes got subsumed in GST, what was the reason behind it, and why there was a need of a single tax which was named as goods and services tax. Let's have an example. Suppose I am a manufacturer. I have just jotted down an example, numerical example for you. Sir, suppose I am a manufacturer. Sir, this is the example which I am talking about is example for the time period before the introduction of GST. Suppose GST is not there. If GST was not there on manufacture of the goods, before GST, on manufacture of the goods, central excise duty was charged. Central excise duty was the revenue of central government. And on sale of goods, weight, sales tax was charged, which was the revenue of state government. Both got subsumed in GST. But sir, before GST, what used to happen, we need to understand it. Then only you'll get the concept behind the introduction of GST, goods and services tax. Sir, you'll have to focus here only, not only with your mind, but with your heart also. Sir, my point is that before the introduction of GST, if a manufacturer is manufacturing some goods, then whatever inputs he is buying, suppose he is buying some inputs from another manufacturer, so the manufacturer of input will sell the goods to manufacturer, and since the manufacturer of input is manufacturing those goods, so he will be charged with excise duty. Clear? Suppose the inputs were costing at rupees 100, on which 10% central excise duty was charged. So that comes to rupees 10. Total amount comes to 110. Now that manufacturer of input will sell the inputs to the another manufacturer. So on sale of goods, sales tax, weight was charged. Suppose 4% was the rate of weight. Suppose we are just taking an example of rate of tax. Sir, so weight was charged on entire 110, because you know manufacturing cost manufacturing tax will be included in the cost while selling the goods. So excise duty was also the part of the value of the goods while charging weight. So weight was being charged on entire rupees 110, which comes to 4.4. So total amount comes to 114.4. So this is the invoice on which excise was also charged and weight was also charged by the manufacturer, because these are indirect taxes. The manufacturer of input will sell the goods to the customer and he will issue the invoice mentioning excise as well as weight, because these are indirect taxes. He will collect the taxes from the customer and he will pay to the government. So total amount comes to 114.40. So this is the invoice which the supplier will issue to the customer. So now the customer is again a manufacturer of some output goods. Sir, manufacturer got the invoice of 110.40 from his supplier who was the manufacturer of inputs. Now the buyer, who is the manufacturer of some output goods, is also manufacturing the goods on which excise duty will be charged. And since he has already paid the tax on his purchases, excise duty he has already paid on his purchases, and on his sale again excise will be charged. So whatever excise duty was paid on the purchase of the goods, it was allowed as senvet credit. So he availed the credit of rupees 10 as senvet credit. Senvet means central value-added tax. Senvet, central VAT. So he availed the credit of senvet credit, and he availed the senvet credit of rupees 10, which was excise duty charged by the supplier, manufacturer. Okay. Now the manufacturer who is buying the goods, after manufacturing his output goods, he will sell the goods, and on sale of goods again sales tax, weight will be charged. So whatever weight he has paid on his purchases, which is 4.4, he will be allowed to claim the input tax credit of that weight credit. So weight credit availed was rupees 4.40. So sir, total purchase price was 114.40. Total purchase price was 114.40, out of which a senvet credit of rupees 10 was allowed, a weight credit of 4.4 was allowed. So out of 114.40, 10 senvet credit is allowed, 4.4 weight credit is allowed, which will be available for use at the time of paying the liability. So these are current assets. So out of 114.40, his actual cost comes to rupees 100 only. So his actual cost is rupees 100, and after purchasing those inputs, he will process the inputs to manufacture the output goods, and he will add some cost, his profit margin, etc., which is called value addition. His value addition is suppose rupees 40 per unit. So rupees 40 is his value addition, his cost, his all expenses, his profit margin, etc. So his sale price comes to rupees 140. Sir, 140 is his sale price. 140 is the sale price. His purchase cost was 100, his value addition including margin was rupees 40, total comes to 140. This is his sale price. Now since he has manufactured the goods, sir, so since he has manufactured the goods, when he will sell it, excise duty will be charged. Suppose central excise duty rate was 10% only, so 140 into 10% comes to 14. So total amount comes to 150. Now when the supplier will sell those goods, when the manufacturer will sell those goods, again weight will be charged. Suppose rate of weight, again taking an example of 4%, it comes to 6.16, 4% of 154. It comes to 6.16, sir, and total amount comes to 160.16. This is the sale invoice which the supplier will be issuing to his customer. See, 160.16 is the sale invoice. Now the manufacturer will sell the goods to his customer for rupees 160.16. This is indirect tax. He will collect 160.16 from the customer. But out of this 160.16, 14 is the liability of central excise duty, and 6.16 is the liability of state weight charges, state weight taxes. Sir, sales tax. Sir, now 14 he has collected. The manufacturer has collected 14 as excise duty from his customers and 6.16 is VAT from his customers. Now these are indirect taxes. Now that manufacturer will have to pay these taxes to his the government. But while paying 14 rupees to the central government, see, 14 is the central excise duty, it is the revenue of central government. While paying 14 to the central government, he will utilize the SENVAT credit which he had availed at the time of purchase of those inputs. Sir, so 10 was the credit which was available with him. He will use the SENVAT credit of rupees 10 and balance. Sir, balance 4 rupee he will pay to the government. So ultimately 10 he had already paid at the time of purchase, just like an advance tax. He had already purchased the tax at the time of purchase. So remaining amount of tax comes to rupees 4 he will pay. So whatever tax he had purchased at the time of purchase of inputs, sir, he had claimed the credit of those taxes at the time of purchase. Now he will utilize it, and he has used the credit of rupees 10, and remaining balance 4 he has paid to the government. Yes or no? Clear? Done. So this is how he has paid the entire liability of 14 to the central government. Now same point comes for VAT. The VAT liability is 6.16. He has collected the 6.16 from the customer. He will have to pay the 6.16 to the state government. While paying 6.16 to the state government, sir, he has credit of 4.40 available with him. VAT credit. He will utilize this VAT credit of 4.4 to make the payment of 6.16 liability. Sir, 6.16 has to be paid to the state government, and state government input VAT credit he is having 4.40. He will utilize it, and remaining 1.76 he will pay to the state government. So ultimately total 6.16 he will pay to the government, and he has paid the 6.16 to the government by utilizing 4.4 as VAT credit and remaining 1.76 by bank payment. Clear? Done. So this is how system runs regarding availment of credit and utilization of credit. Sir, I hope you are getting the system step by step, that how purchases are made, how taxes are paid on purchases, how credits are availed, and how liability is created at the time of sale, and how the liability is paid by utilizing the SENVAT credit or VAT credit, and how remaining amount is paid to the government. I hope you are getting the concept. Sir, I think this term, credit availment and credit utilization, I hope you are getting this point. When you pay the tax at the time of purchase, which is and the purchase inputs are going to be used in such output goods on which same tax is to be charged, then you will avail the credit at the time of purchase, and at the time of sale liability will be created because you have collected the tax from the customer, and to pay the tax you can utilize the credit which you had availed at the time of purchase. Clear? Whether the credit is of SENVAT credit and whether the credit is of VAT credit, it's of no concern. I think fundamental you got it. Fundamentally both are absolutely same. The functioning, whether it is of VAT credit or the functioning whether it is of SENVAT credit, both are absolutely same. Okay, one more point I'm adding. I hope availment of credit and utilization of credit, these two terms are clear at your end. Okay, sir. Now point comes, suppose at the time of purchase, you have the SENVAT credit of rupees 10 because you had paid the tax to the central government. So central government will give you the credit. They have given the credit of rupees 10. Now you will utilize it for payment of your liability. My point is that, can you utilize SENVAT credit for payment of VAT liability? Suppose you are having some excess credit of SENVAT credit and you don't have the VAT credit, suppose, in any case, and you are having excess VAT liability. Can you utilize the SENVAT credit for making payment of VAT liability? Answer is no. Why no? Because Senvet credit is given by central government because you had paid the taxes to the central government. Now, for paying the liability of weight, you can't use the Senvet credit because the taxes which you had paid to the central government. How the state government will allow the credit? So, Senvet credit can't be used for weight credit. Senvet credit can't be used for weight liability. Same way, weight credit cannot be used for Senvet liabilities, central liabilities. Clear? Because both are two different taxes, both are two different government. Amounts are paid to the different governments. So, credits of Senvet credit can't be used for weight credit, and credit of weight can't be used for Senvet. I hope you are getting the point. Okay, sir. Now, my simple point comes. Sir, my simple point is that and this is the, basic fundamental which will be used for entire indirect tax. Okay, a formula which we will be deriving from here. My simple question, my simple fundamental is that why the credit of rupees 10 was allowed? Why the credit of rupees 10 is allowed? In Hindi, my dialogue is fixed. 10 ka credit kyun mila? For North India students, it's very famous. This dialogue is very famous from my side. Thus, this is the rupees 10. So, thus, in English, 10 ka credit kyun mila? Why the credit of rupees 10 is allowed? This is my simple question. Sir, I'll give you the answer in a perfect manner, without any error. Sir, many of the people says that since you have paid the tax on purchases, so credit was allowed. No. This answer is good, but not perfect. And good is not enough for CA final. Perfection is required. Whether you are in CA, CS or CMA, if you are at final level, then good is not enough. Perfection is required. That's why it's called professional degree. There is no scope of any mistake at all. Sarkar, my point is that why the credit of rupees 10 is allowed? Sir, because not only because you have paid the tax on purchases. See the entire reason behind it. Because you have paid the tax on purchases. But using those purchases, using those inputs or input service or capital goods, you are going to supply the output goods or output services, which you are going to sell at rupees 140 in this example. And tax is being charged on entire rupees 140. Excise in this example is going to be charged on entire rupees 140, which includes 100. See, in rupees 140, 100 is also included. And on that 100 rupee, you have already paid the tax here. And again, tax is being charged on entire rupees 140, including 100. So on that 100, on which you have already paid the tax, once again, tax is being charged at the sale time because it is included in sale price. Since tax is being charged on entire rupees 140, which includes 100, on which we have already paid the tax. So, tax will be charged double time, na sir? And see, here I have taken the step of only two. You have purchased and just sold it. Suppose I have manufactured some inputs. I have sold it to you. You have sold it to somebody else. He has manufactured some other goods. And these are inputs for somebody else. Then multiple times tax will be charged. Each and every time new goods is being manufactured, again entire value will be charged to tax. So, in this example, tax is being charged on rupees 140, which includes 100. On which we have already paid the tax, and again tax is being charged on rupees 140, which includes 100. So to avoid the multiple taxation, multiple taxation and cascading effect, credit of rupees 10 was allowed. Multiple taxation means, sir, tax on this 100 already we have paid, and again in sale price 140, 100 is included. So if credit is not allowed, then on 140 again tax will be charged. So on rupees 100 tax is being charged multiple times. Here in this example it is 2 times. If we increase the step by 1 more time, then 3 times, 4 times, 5 times. So it is better to say multiple times, multiple taxation. This is called multiple taxation and cascading effect. Now point comes, what do you mean by cascading effect? See, we already discussed the point about multiple taxation. Sir, on rupees 100 tax is already paid, already been charged, and again on rupees 140 including 100 tax is being charged. So it is called multiple taxation. So credit was allowed. Now what is the cascading effect? Suppose if credit was not allowed, then your cost would have been entire 114.40. No credit of excise, no credit of weight was allowed. Your entire cost is 114.40. So ultimately this 10 will form part of cost. And if it is forming the part of cost, then again it will be included in the sale price. And if it is, the amount of excise is also included in the sale price. And on that sale price, if again 10% will be charged, then excise duty on the sale will be charged on amount of excise also. So this 10% would have been charged on this 10 also, because ultimately this will form part of cost price. If credit was not allowed, so same tax on same tax would have been charged if credit was not allowed. So this would lead to cascading effect. So same tax on same tax is called cascading effect. Sir, same tax on same tax is called cascading effect. And sir, if credit was not allowed, then multiple taxation would have been there on rupees 100. Cascading effect would have been there on rupees 10. That's why credit of rupees 10 was allowed. I repeat, sir, I'll summarize it. Sir, my point was that why the credit of rupees 10 was allowed. My point is why the credit of rupees 10 is allowed. So simple answer is that since the tax was being charged on entire rupees 140, which includes 100, on which we have already paid the tax, and again tax was being charged on entire rupees 140 including 100. So to avoid the multiple taxation and cascading effect, the credit of rupees 10 was allowed. I hope you got the entire fundamental why the credit is allowed. Sir, see, I'll justify this explanation. Suppose you have paid some tax on your purchases. Suppose rupees 10 was paid on your purchases here. Sir, suppose you have paid tax on your purchases. And on your sale, suppose excise duty is exempted. On your sale, suppose no excise is being charged. On your sale, if no excise is being charged, you tell me whether multiple taxation will take place. Answer is no. Whether cascading effect will take place. Answer is no. Why? Because on your sale, tax is not being charged. If on your sale no tax is being levied, no tax is being charged, it is exempted, then there is no point of multiple taxation, because again tax is not being charged. So there is no point of giving the credit of taxes paid on purchases. So, sir, if your output goods or output services are exempted or not chargeable to tax, then no credit should be allowed, because there is no point of multiple taxation and cascading effect. See, many of the people have the wrong myth that if you have paid the tax on purchases, then credit will be allowed. Answer is absolutely no. This is not the absolute correct reason. The absolute correct reason is Because tax is being charged on entire rupees 140, which includes 100 on which we have already paid the tax. And again tax is being charged on entire rupees 140. So to avoid the multiple taxation and cascading fact, the credit of rupees 10 is allowed. Sir, suppose no tax is being charged on rupees 140, it is exempted, then there is no point of any multiple taxation, there is no point of any cascading effect, so no credit will be allowed of whatever tax you have paid on purchases. Clear? I hope you got the fundamental. So again, sir, what I had said, good is not enough, perfection is required. Okay, so whatever, sir, the explanation which I have given, why the credit of rupees 10 is allowed, sir, this is the perfect answer. I want you all to repeat this answer, although we are sitting at a distance, but yes, I want you all to get involved in the lectures. Sir, live about entire world. Sir, we and you, me and you both are sitting here and we both are talking to each other. That's it. If you are having your mobile on your hand, sir, please keep it away. Sir, forget about all other things. Only you and me both are sitting and both are discussing what the indirect tax is. That's it. Please, 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 sir. I request you, please do focus here only, and we all will enjoy the lectures. You know, this is not the way that just we'll open the book and I'll explain you one point and you will remember it. No, we have to get indulged in this aura of indirect tax, then only you will enjoy the lecture. And I'll try my best, and definitely you will be bound to enjoy. It's my guarantee. Sarkar, my point is that in case of indirect tax, sir, you'll have to repeat why the credit of rupees 10 is allowed. Sir, you can close your eyes and just imagine. Just imagine why the credit of rupees 10 is allowed. So this is the formula of entire indirect tax. Trust me, sir, on the basis of just this simple formula, I will finish the entire indirect tax. It's my challenge. Sir, whether it's service tax, it's excise, it's VAT, it's GST, I'll do it. Don't worry. Sir, just go with the flow and tell me why the credit of rupees 10 is allowed. Just close your eyes. Sir, just imagine why the credit of rupees 10 is allowed. Because tax is being charged on entire rupees 140. Imagine 140. Tax is being charged on entire rupees 140, which includes 100, on which we have already paid the tax. And again on rupees 140, tax is being charged. So to avoid the multiple taxation, if we don't give the credit, then multiple taxation will take place, cascading effect will take place. So to avoid the multiple taxation and cascading effect, the credit of rupees 10 is allowed. Sir, this include many answers. Now you will not have to remember that if output goods are exempted, then credit will not be allowed. Automatically your mind will say, no, sir, credit should not be allowed in this case because your output goods are not taxable at all. So this is what I need. Logical answer I need. Sir, so if tax is not being charged on your sale, then no credit will be allowed. Automatically your mind should say this answer. Because there is no case of multiple taxation, there is no point of cascading effect, then there is no question of ITC at all. Sir, okay. Now my point comes. Now my question comes. Sir, listen to me very carefully. Yes, now you can open your eyes. Please, sir. Don't sleep. Oh, sir. Why the credit of rupees 4.4 allowed? Till now, we have spoken about, or we have discussed about rupees 10. Why the credit of rupees 10 is allowed? Now my question is, why the credit of rupees 4.4 is allowed? Many of the students are saying that, sir, same answer. I know same answer, but I need that you should speak. Why the credit of rupees 10 is allowed? Why the credit of rupees 4.4 is allowed? Sir, see, because tax is being charged on entire rupees 154. Wait, is being charged on entire rupees 154, which includes 110, on which we have already paid the VAT. And again, tax is being charged on entire rupees 154, including 110. So to avoid the multiple taxation and cascading fact, the credit of rupees 4.4 is allowed. So it means the fundamental behind VAT credit and SENVAT credit is absolutely same. Yes, absolutely same. Suppose on your sale, VAT is exempted. Suppose on your sale, VAT is exempted, it is not chargeable at all, then will the credit of rupees 4.4 allowed? No. Government will not allow the credit of rupees 4.4 because on your sale, no tax is being charged. No multiple taxation is there. No cascading effect is there. So, we'll repeat why the credit of rupees 4.4 is allowed. Because tax is being charged on entire rupees 154. Entire rupees 154, which includes 110 on which we have already paid the VAT, and again tax is being charged on entire rupees 154 including 110. So to avoid the multiple taxation and cascading effect, the credit of rupees 4.4 is allowed. I hope you got the entire picture very clearly. Okay, sir. Now we have already discussed that SENVAT credit is the credit of taxes which are paid to central government, and VAT is the revenue of state government. Sir, and VAT credit and SENVAT credit cannot be merged together. Both are two different taxes, both are two different credits, both are given by two different governments. So VAT liability can't be paid by SENVAT credit. SENVAT liabilities, excise or service tax liability, cannot be paid by VAT credit. I hope we got the point. Sir, VAT is the revenue of state government, SENVAT is the revenue of central government. Clear? We can't use it interchangeably because both are two different governments. Clear? Done. Sir, now I am coming to the next step. Now listen to me very carefully. Okay, sir, my simple point is that suppose on your sale, excise is not being charged. Suppose on your sale, excise is not being charged. Then whether the SENVAT credit will be allowed? Answer is no. Suppose on your sale, VAT is exempted, VAT is not charged, then whether the credit of VAT will be allowed? Answer is no. Sir, suppose on your sale, neither excise nor service tax nor VAT is charged. No SENVAT credit will be allowed and no VAT credit will be allowed. No ITC will be allowed to you. ITC means input tax credit. Sir, keep some patience. I know I have to teach GST, but I have to clear the basic fundamentals behind all these provisions. If you get the basic fundamentals, then automatically GST will come into your mind automatically. I want that you understand the concept. Okay, sir, my simple point comes, in case of GST, in case of VAT and service tax excise, suppose on your sale, excise duty is charged, but VAT is not charged. VAT is exempted, excise is chargeable on your manufacture of the goods and sale of goods. Then in such case, SENVAT credit will be allowed, but VAT credit will not be allowed. Simple. But same way, vice versa, if on your sale of goods, VAT is charged, but excise is not charged, then no SENVAT credit will be allowed, but VAT credit will be allowed. And if both the taxes are charged, then both the credit will be allowed. If one is charged, another is not charged, then one credit will be allowed, another credit will not be allowed. If no tax is being charged on your sale, then no credit will be allowed at all. I hope you got this simple fundamental in your mind directly. Okay. Sir, service tax. Service tax was the revenue of central government. Excise duty. Excise duty was also the revenue of central excise duty, was also the revenue of central government. VAT or sales tax, it is the revenue of state government. Okay, sir. My point comes, service tax was charged on supply of services. Excise duty was charged on manufacture of goods, but both are taxes of central government only. Whether it is central excise or it is service tax, both are the revenue of central government only, and both are charged on sale of goods or services. So, although service tax was charged on services, but it is the revenue of central government. Excise duty, central excise duty was charged on manufacture of the goods, but again it is the revenue of central government. So whether it is service tax or central excise, both are allowed as SENVET credit. And sir, whether you have paid service tax on your purchase of services or whether you have paid central excise duty on purchase of inputs or capital goods, sir, both the taxes will be credited as SENVET credit in a single account. Means there is no point of differentiating between service tax and excise as far as SENVET credit is allowed. So now whether you are a service supplier or whether you are a manufacturer of the goods, if you are paying service tax on your output services, then also entire SENVET credit of whether it is central excise or service tax, both will be allowed. And if you are a manufacturer of the goods and excise duty is being charged on sale on manufacture of such goods, then if you have paid any service tax on your input services, if you have paid any excise duty on capital goods or inputs, then entire amount will be credited to SENVET credit account, and SENVET credit will be allowed whether it is of service tax or excise for paying liability of excise duty also. So practically talking, whether it is service tax which is paid on services or whether it is central excise duty paid on manufacture of the goods, both are one and same, both were revenue of central government, so both will be both were credited to a single account which is called SENVET credit, and no need to make two different account for service tax and excise credit. Both will be credited to single account which is called SENVET credit account. So whether you are a service supplier or whether you are a manufacturer, SENVET credit will be allowed. SENVET credit was allowed for service tax as well as central excise duty, and if you are a manufacturer or a service supplier, SENVET credit will be allowed on of taxes paid on your purchases of goods or services. Whether it is excise duty or service tax, SENVET credit will be allowed. Whether your liability is of service tax or of central excise duty, this credit you can use for making payment of excise or service tax. But if you are a trader, if you paid the weight on your purchases, and if you are making some sale and weight is being charged on your sale, then weight credit will be allowed for paying the liability of weight. But yeah, service tax and excise were single tax. SENVET credit and weight is a different tax because weight was the revenue of state government and central excise and service tax was the revenue of central government. So both are single taxes only, which was called SENVET credit, and weight is different because it is a state government revenue. Clear? So if you are having liability of, sir, I am coming to next step. So listen to me again carefully. If you are having liability of service tax or excise, SENVET credit of excise and service tax both will be allowed. And if you are having liability of weight, then weight credit will be allowed. Okay, done. Sir, now let's take an example. Sir, we have discussed why the credit of rupees 10 is allowed, why the credit of rupees 4.4 is allowed. We have discussed that if you are having liability of weight or if you are having liability of weight, then weight credit will be allowed. If you are having liability of either service tax or excise, then SENVET credit of service tax or excise will be allowed. Otherwise, no credit will be allowed. Okay, done. Sir, let's take an example of, suppose I am a manufacturer. I am a manufacturer. Sir, I am coming to the next step. What was the lacuna? Sir, the system of credit which I have taught you was there before GST, in the pre-GST regime. But why GST was required? Now listen to me very carefully. So this example will clarify you why GST was required and what was the lacuna in the previous laws. Sir, suppose I am a manufacturer, I am manufacturing certain goods. Sir, to manufacture the goods, suppose I am a manufacturer of these mobile phones. I am a manufacturer of these mobile phones. To manufacture the mobile phone, I require some inputs, some capital goods. I purchased it directly from the manufacturers. I needed some services also, like marketing services, technician services, consultant services, engineering services, blah, 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 blah services, many services. On services, I have paid service tax. On my inputs and capital goods, I have paid excise duty as well as weight. Now on manufacture of this mobile phone, whenever I will sell this mobile phone, central excise duty will be charged plus weight will also be charged. So whatever excise duty I have paid on purchases, whatever service tax I have paid on purchases, since on my sale excise duty is being charged, so I will be allowed SENVET credit of service tax and excise, and that will I'll use it for paying the liability of excise. And on purchase of the goods, inputs and capital goods, I have paid weight, and on sale of such goods, again weight liability is there. So I will be allowed credit of weight for paying liability of weight only. Okay, done. So for a manufacturer, it was easy. Suppose I am a service supplier. I am a service supplier. Listen to me very carefully. Sir, before GST regime, on services, service tax was charged. Weight was not charged. Service tax was the revenue of central government. Okay, I am a service supplier. Sir, suppose I am providing these coaching services, commercial training or coaching services, or I am a consultant. Sir, to provide my services, I have purchased this iPad, this camera, this laptop, etc. Some inputs I have purchased, some capital goods I have purchased, some marketing services I have taken, some commission agent services I have taken. So various services I have purchased to provide my output service, on which service suppliers have charged service tax. I will claim the Senvit credit of those service tax. Okay. On my sale, liability of only service tax will come. To pay the liability of service tax, credit of service tax will be allowed. And whatever capital goods or inputs I have purchased, laptop, iPad, camera, light, studio light, etc., blah, blah, blah. Various goods I have purchased on which I have paid excise duty. Sir, Senvit credit of excise duty will also be allowed to service provider, because on his services, service tax was charged. It is the revenue of central government, and Senvit credit of excise as well as service tax both are allowed. But on the purchase of the goods like camera, laptop, iPad, computer, laptop, screen, etc., I have also paid weight, because I have purchased these goods from some supplier who has charged weight on the invoices. But on my sale, only service tax is being charged, and you know that service tax is the revenue of central government. On my purchases, I have paid only weight. Sir, if I have paid the excise and service tax, I will get the Senvit credit, no doubt. But if I have paid the weight also, sir, since on my sale no weight liability is there, so no input tax credit of that weight will be allowed, and entire the weight which I have paid on my purchases will be added to my cost, because on my sale weight is not being charged, and sir, weight paid on purchases will form part of my cost. Clear? Now taking to the next step. Just think. Just imagine. Sir, I am a service supplier. On my services, service tax is being charged. Government is very simply said that service provider, you don't worry, you will be allowed the entire credit of service tax which you have paid on your input services, as well as central excise duty which you have paid on your inputs as well as capital goods. Practically speaking, you tell me, who can charge the central excise duty on the invoice? Suppose I have to purchase this iPad. Suppose I have to purchase the laptop. I have to purchase this camera. I am a service supplier. I am allowed the credit of central excise duty, but it should be mentioned on the invoice now. If central excise duty is not charged on the invoice, how can I claim the credit? Now, who can charge the central excise duty on the invoice? Manufacturer. You tell me whether I will buy this laptop, camera, iPad, etc. from the manufacturer directly. Suppose I am having the camera of Sony or Canon camera I am having. To get the credit, I'll have to buy these goods directly from the manufacturer. Sir, suppose I am located in Mumbai, Maharashtra, and the factory of the manufacturer is located in Chennai. Sir, to buy one laptop, will I go to Chennai? Or will that manufacturer directly sell to me, end consumer? Never. First of all, I don't have the time to go to Chennai to buy the single laptop. Just because I'll be able to get the Senvit credit if the excise duty is mentioned on the invoice, Because if I buy the laptop or camera, etc., from a nearby showroom, who's a trader, he can't charge the central excise duty on his invoice. He can just charge weight. Sir, just to claim the credit, because I'll be getting the credit on the basis of invoice of the manufacturer. Sir, I can't go to the manufacturer directly. And suppose even if I go to the manufacturer just to buy a single camera, he will say, get out. He's not a retailer, boss. He's a manufacturer manufacturing the goods at large scale. You tell me practically, if I am a service supplier, sir, government has simply said that sandwich credit of excise duty is allowed of goods purchased by you. But practically you tell me, sir, on my purchase invoices, on purchase of 99% of my inputs or capital goods, sir, I will definitely purchase those inputs or capital goods from my nearby showroom, who is a trader, and he will charge just weight on his invoices, because excise was charged only on manufacture of the goods, not on sale of goods, not on trading of the goods. And he is just a trader. He can't charge excise on his invoice. Sir, you tell me. You tell me, it means if excise duty is not mentioned on the invoice, no credit of excise duty will be allowed. And the trader can charge just weight. The weight is mentioned on the invoice, but credit of that weight is not allowed. Means the tax which is required on the invoice is excise duty, which can't be mentioned by the trader. And the tax which he is charging is VAT, which is not of use at all for me. Means the thing which is required is not there, and the thing which is there is not required. Please don't link it with the life. The thing which is required is not there, and the thing which is there is not required. Sir, my simple point is that you tell me, practically talking about, before GST regime, no doubt government had allowed that yes, Yashvant, yes, service suppliers, you will be eligible to claim the credit of central excise, but practically they were not able to claim the credit of central excise, because they were not, they will not go directly to the manufacturer to buy the one single laptop, camera, etc. They will buy from the showroom, nearby showroom or trader, who will charge only weight, and the weight credit is not allowed to the service supplier. The excise credit which is allowed to them, they will not be eligible to claim, because on the invoice excise was not charged. So practically talking about, sir, service providers were not getting any credit of sandwich credit regarding excise duty. Sir, I myself, teaching the indirect tax from last 12 years, I have not claimed a single rupee of sandwich credit of excise for paying my liability of service tax before GST regime. Sir, this was the pain in the heart. Sir, these are the lacunas of the previous laws. See the emotions. Don't cry, huh? Sir, if you talk about trader, see, for a manufacturer, on his sale, excise as well as VAT both was charged. On his purchase, whatever excise he is paying, whatever service tax he is paying, whatever VAT he is paying, he will be allowed the credit. But for a service supplier, only service tax is being charged. No VAT is charged, so no credit of VAT is allowed, and excise is not there on the purchase invoice. Practically talking about, because he will buy from the trader only. So practically very less credit he was eligible for. And if you talk about traders, on trading of the goods, only VAT is charged on his purchases, whatever he is paying, whether it is service tax or excise. He will not be allowed to claim any of the sandwich credit, because on his sale only VAT was charged. Now whatever VAT he is paying on his purchases, he will be allowed to claim the VAT credit. But you tell me, if I am having a showroom, I am having a showroom of electronics. Before GST regime, I have taken consultancy from you. I had taken marketing services from you, advertisement services from you. You tell me, whatever services you have provided to me, you might have charged service tax on the invoice. Sir, you tell me, not even a single rupee. You tell me whether even a single rupee credit will be, sandwich credit will be allowed to the trader. Answer is no. Why no? Because on his sale, only excise duty is charged, only weight is charged, no excise duty, no service tax is charged. So entire service tax or excise, if any, is there on his invoice, will get form part of his cost price only. You tell me now the trader, what he will tell to the service supplier? If he is raising the invoice of rupees 10 lakh plus service tax was 15% at the time, sir, 1,50,000 was the service tax, entire will form part of his cost only, no credit was allowed. So definitely that trader will ask the service supplier that please don't raise the invoice of full value. I will give some amount in cash. Just raise the invoice of lesser value so that lesser tax will be charged on the invoice and lesser cost will be added to my entire cost. Lesser amount of tax will be added to my cost. Rest I will pay you in cash. So definitely this will lead to tax evasion, wrong practices. What the trader will do? You tell me. Entire service tax and excise is going to be added in his cost. 15% is the rate of service tax. 15% was the rate of service tax. His cost will get shoot up by 15%, whatever services he is purchasing. So these were the lacuna in the previous laws. Although the trader was paying tax on his sale, but that was only weight, not the taxes of central government. So he was not able to claim the sandwich credit. And even for a manufacturer who was eligible to claim the credit of weight as well as excise, even for many of the purchases, he was not getting the invoices directly from the manufacturer, because practically also, suppose you are a manufacturer and if you are buying a laptop or you are buying some AC for your factory or showroom, your outlet. Suppose you are buying AC for your factory. You will buy from the showroom, not from the manufacturer directly. Again, that manufacturer himself will not be able to get the invoice on which excise will be mentioned on those AC or laptop. Yes, he will be having weight on his purchase invoice. He will be able to claim the credit of weight. But again, excise is lost. Although excise was paid at the time of manufacture of the goods. But he was not eligible to claim the credit because on his purchase invoice, excise was not mentioned because he had purchased those goods from the trader. So these were the loopholes in the previous laws. Input tax credit chain was not smooth. Multiple taxation was taking place. Cascading effect was taking place because smooth flow of credit was not allowed. So there was a requirement of a system. Sir, there was a requirement of a system which can eradicate all these ill effect of the old taxation, and the dream came to the government that why don't we merge all these taxes into a single tax, and the name of that tax will be the tax on all the goods and all the services. Goods and services tax. And government imagined or government dreamt, they saw the dream of introducing GST in India. But introducing the GST was not so easy in India because merging the taxes of central government and state government was a big challenge. Because India having dual government system. Sir, here central government is also there, state government is also there. Sir, some taxes are the revenue of central government, some taxes are the revenue of state government. And on goods and services, some taxes of central government, some taxes of state government was charged. And to merge both these taxes, revenues of central government and state government will get merged. Sir, if you go about single tax, GST, goods and services tax, one nation, one tax, one market. Sir, how it will be implied in the government, in the India, because how the revenues will be distributed. Because, sir, in the pre-GST regime, both central government and state governments were getting the revenue out of sale of goods and services. So, no doubt there was a dream that will bring GST, but there was a challenge that how the revenues will be decided. So Government came with an idea that yes, we will charge one single tax named as GST, but we will divide the revenue between central government and state government. Whatever revenue will come, we will divide it 50-50%. 50% central government, 50% revenue will be of state government. Sir, this is how they formed the dual GST system in India. And government introduced a dual GST system in India, sir, and they charged two taxes on the same transaction. One is CGST, another is SGST. Sir, hold the heart and focus here only. Now GST is coming and government came out with the GST with effect from 1st of July 2017. But before that, many of the workings they had to complete, because these are revenue matters. VAT, excise, service tax, entertainment tax, many of the taxes we have already seen that those were subsumed. So revenues will have to be distributed between central government and state government. So many working had to be done. So first of all, government came with the idea of introducing dual based taxation in India, CGST and SGST, and equal tax will be charged. It was decided that suppose 18% is the rate of tax, then 9% will be CGST, 9% will be SGST, 9% will be the revenue of central government, and 9% SGST will be the revenue of state government. Okay. Sir, SGST will be charged by state government and CGST will be charged by central government. Sir, relax. Sir, now what will happen? Okay, sir, suppose goods are sold in Maharashtra. Suppose from Mumbai I have sold the goods to a person who is located in Pune. Pune is also in Maharashtra. I have sold the goods from Maharashtra to Maharashtra. Goods are worth rupees 1 CR, 1 crore. 9% is the CGST. Suppose 9% is the SGST. Equal taxes will be charged. So 9 lakh is the CGST. It will be given to the central government, and 9 lakh is the SGST. SGST will be given to the which state government? Maharashtra state government. Same way, suppose one transaction took place in Chennai, Tamil Nadu. Sir, again 1 crore is the sale price. So 9% CGST, 9% SGST will be charged. And 9% means 9 lakh will be given to the central government and 9 lakh will be given to the Tamil Nadu state government. Sir, my point comes, CGST will be levied by central government. Okay. So for that, CGST Act was formed and SGST will be levied by state government. And if SGST will be levied by state government, then state government will have to frame an act for that. So SGST Act was framed, and in India how many states are there? Sir, people are thinking, how many states? Oh, sir, 28. 28 states we are having. So 28 states will levy their own SGST Act. They will have to frame their own SGST Act. But don't worry, if one CGST Act, because central government is one only, one CGST Act will be there and 28 SGST will be there. Sir, but all acts are absolutely same. Sir, if each state has, if each state will be allowed to frame their own SGST Act, different from another state government or central government, then the things will come to one same place, which was service tax, excise, VAT itself. But to make the GST law uniformly applicable throughout the country, sir, government framed same act. And sir, you tell me, sir, how is it possible that all the state government will agree on the same act? Sir, see, what I am talking about is that, see here, suppose one CGST Act is formed, and if all the state governments are said that you also frame the same act in respective states also, then it means all the power to frame the law under GST will come to central government. So before introducing the GST, sir, it was the requirement that all the state governments and central government come together and agree for the same act. But sir, why this all the state governments will agree? Because earlier before GST, VAT was the revenue of state government, and VAT Act was being formed by state government only. So they had the power. They had the power to frame the laws. No doubt, revenue will be divided 50% to central government, 50% to state government. But yeah, all the state government will lose their power to frame the law if the power will be given to the central government to frame the law of GST. So all states said that no. Sir, our power will have to be with us only. So again discussion came. They did the discussion that if the all state governments frame their own state legislation, then how the GST will be implemented. So a solution was formed and a GST Council, Goods and Services Tax Council, you might have heard the name of GST Council, was formed. The chairman of which is Union Finance Minister, and all the state governments have their nominated members in the GST Council. So all the state governments and the central government formed a common council which is called GST Council, and now GST Council will discuss the entire law, sir. And now, sir, that GST Council is the constitution of all the state government and central government, and they all will take the decision uniformly. And when they will take the decision uniformly, then the act will be framed, and this act will be framed in discussion with all the state government and central government, and they will come up with uniform idea and uniform decision will be taken. So GST Council is the base behind keeping all the laws at a single platform. So all the state governments and central government will combinedly discuss the ideas, will discuss the provisions, and will discuss the amendments required, and then only on the recommendation of the GST Council, amendments will be made and law will be framed, and accordingly GST was framed. And sir, same act is there throughout the country in every state. No doubt, sir. We are having 28 states, so we are having 28 SGST acts. Wait for a moment. But this is the GST Council. Suppose act is framed. Whatever section number is there in CGST Act, absolutely same section number and content of the same section is there in the all state governments. So if you have read one CGST Act, it means you have the knowledge of all the SGST Acts throughout the country. Absolutely same. The difference is, in the CGST Act, the meaning of government is central government, and in the SGST Act, meaning of government is the state government. And a few transitional provisions which were there at the time of introduction of GST were different. That's it. Otherwise, absolutely each and every section, subsection, everything is same. And this GST Council will maintain the similarity of all the acts throughout the GST. How? We have heard that periodically GST Council meeting is held, and whatever amendments are required to be done in the act, or whatever improvements are required to be done, those are discussed in GST Council. Those are being discussed by all the state government representatives as well as central government representatives, and they will take the common decision. And whatever decision they are taking, it means all the state government and central government mutually is taking the decision. And at the same time, amendments will be done in all the state acts and central act. So this is how GST is being introduced, sir. So if you have read the CGST Act, it means all SGST Act you have the knowledge. Absolutely same sections are there, same provisions are there. Otherwise, the fundamental behind introducing GST will be lost. Clear? I hope you are getting the point, sir. So all state government passed their respective. See, Maharashtra state government GST Act is different. Chennai, Tamil Nadu state government SGST Act is different. Gujarat GST Act is different. Telangana GST Act is different, but provisions are absolutely same. Clear? But in India, Every state government passed their own state act. Central government passed their CGST act. But yes, sir, no doubt number of acts are multiple, but they are having the same provisions, so no worries. So one was CGST act, 28 was SGST act, but you know, in our state, in our country, 28 are the states. There are 8 union territories in India. 8. There are 8 union territories in India, but yeah, out of those 8 union territories, 3 union territories are having their own state legislature. 3 union territories: Delhi, Pondicherry, and Jammu and Kashmir. Sir, Delhi, Puducherry, and Jammu and Kashmir, these are 3 union territories which are having their own state legislature. That's why these 3 union territories are having their own SGST Act. So 28 were the actual states, and 3 union territories are having their own SGST Act. So total 31 SGST Acts are there. And for other union territories, there is one common UTGST Act which is applicable to all the remaining union territories. Okay, sir. Now what will happen? Sir, one CGST is framed, 31 SGST Acts are passed, one union territory UTGST Act is passed for all the union territories. Now what will happen? Suppose I had taken the example that goods worth rupees 1 crore or services worth rupees 1 crore are sold from Maharashtra to Maharashtra, then CGST and SGST will be charged. CGST central government 9% and 9% Maharashtra state government will be charged, and revenue will be given to the Maharashtra state government, sir. But sir, what will happen? What will happen, sir, if the goods are sold from Maharashtra to Gujarat? Sir, what will happen if goods will be sold to the person who is located in Gujarat and the person who is selling the goods is located in Maharashtra? If goods are sold from Maharashtra to Gujarat, then what will be charged? Sir, agreed, 50% is the revenue of central government, but remaining 50% will be of the which state government? Whether it will be of Maharashtra or Gujarat. Sir, so to remove this dispute, to solve this dispute, sir, a separate tax, IGST Act, sorry, integrated goods and services tax is charged. So a separate act, IGST Act, is introduced, and sir, one IGST Act is also introduced. Now again, sir, now this IGST is integrated goods and services tax. Sir, suppose 9% is the CGST, so obviously equal, absolutely same, 9% will be SGST. So in case if it is interstate supply, if it is one state to another state, it is interstate supply, then C plus S, that is 18% will be the IGST. But point comes, whose revenue it is IGST? To whom? Which state or which center? Whether it is the revenue of central government or whether it is the revenue of state government. And if it is the revenue of central government, state government, then which state government? And if it is given entirely to the central government, then again state government will say no, this is wrong. Why the central government should take the credit, should take the revenue of interstate transaction? It is wrong. It should be distributed to state also. So now coming to this point, sir, whose revenue it will be? IGST. So for the time being, for next 5 to 10 minutes, you imagine that IGST is a parking fund. It's a separate fund. It's separate account itself. Sir, it is neither the revenue of central government nor the revenue of state government. Yeah, no doubt IGST Act, it is a single act which is governed by central government only, and the fund of IGST is also managed by a central government, but it is not the revenue of central government. Okay, it is a parking fund. Wait for 5 minutes. I'll explain you how it is, how it will work. Sir, now point comes, suppose I am located in Maharashtra. Goods worth rupees 1 crore were sold to a person who was located in Maharashtra only. So it is intrastate transaction. 9% is the CGST, 9% SGST. So 1 crore into 9%, 9 lakh is the CGST revenue which is paid to the central government, and 9% is the revenue of Maharashtra state government, and the supplier who has sold the goods to customer in Maharashtra only. What he will do? He will collect the tax from the customer and he will pay to the government. Sir, which government? See here. Sir, Mr. A of Maharashtra sold the goods to Mr. B of Maharashtra only. Okay, goods were of rupees 1 CR, 9% CGST, 9% SGST. Okay, rate of tax is we are keeping the same 18%. Okay, 9 CGST, 9 SGST. Then, sir, this Mr. A would have paid rupees 9 lakh to central government and 9 lakh to Maharashtra state government, sir. Okay, clear? Okay, sir. Now, this Mr. B has purchased the goods from Mr. A. Suppose this Mr. B has sold the goods from Maharashtra to, sir, Tamil Nadu. Sir, Mr. T. Mr. T of Tamil Nadu is the buyer. This is interstate supply. Suppose goods were sold for rupees XYZ amount, and the tax amount comes to, sir, rupees 20 lakhs. Suppose 10 lakh is the CGST, 10 lakh is the SGST. Okay, sir, now Mr. T will pay 20 lakh of tax to the Mr. B. Sir, this 20 lakh will be IGST. Sir, Mr. B is selling the goods to Mr. T on which he has collected IGST because it is interstate supply. Sir, he has collected IGST of rupees 20 lakh from Mr. T. Now, IGST will be payable by Mr. B to the government, and on his purchases, he has already paid 9 lakh as CGST and 9 lakh as Maharashtra SGST. Now, question comes whether the credit, input tax credit of CGST and SGST will be allowed to pay the liability of IGST. Answer is absolutely yes. If it is not allowed, then obviously the cost burden will increase and GST will be a failure. So government allowed that. Yes. This is, IGST is just a parking fund, and we will allow the credit utilization between IGST and CGST and SGST respectively. But yeah, CGST is the revenue of central government. SGST is the revenue of state government. Credit of CGST can't be used for payment of liability of SGST, and SGST can't be used for payment of liability of CGST. But yes, IGST is universal blood. It can be used for I as well as CGST as well as SGST. No worries. Okay, so for paying liability of rupees 20 lakh of IGST, sir, Mr. B will use 9 lakh CGST credit, 9 lakh SGST credit, and sir, 9 lakh CGST ITC, 9 lakh SGST means Maharashtra state ITC, and remaining 2 lakh he will pay to the government. Okay, sir. Now what will happen? Sir, see, when Mr. A had collected the tax from Mr. B, 9 lakh CGST, 9 lakh Maharashtra SGST, then Mr. A would have paid rupees 9 lakh to the central government and 9 lakh to the Maharashtra state government. Now what will happen? When Mr. B will utilize the credit of rupees 9 lakh of CGST, then what will happen? Sir, central government will have to transfer the funds of rupees 9 lakh from their CGST account to IGST account. And 9 lakh was paid to the Maharashtra state government, and this Maharashtra state government credit was used for payment of liability of IGST. So now the IGST account will be created by rupees 9 lakh from the Maharashtra state government. Sir, because ITC of Maharashtra state government was used for payment of liability of IGST. Sir, so Maharashtra state government will pay rupees 9 lakh from their account to IGST account, and remaining 2 lakh will be paid by Mr. B to the IGST account. So ultimately, where the funds are? In the CGST account. See, these are three accounts. CGST account. Okay, I'll shift myself on this screen. Okay, sir. Okay, sir. See, it is the revenue of central government. This is the CGST account. Okay, sir. This is the SGST account, and this is the IGST account. Sir, earlier 9 lakh was paid to the CGST account. 9 lakh was deposited in SGST account, Maharashtra state government. But since the liability of rupees 20 lakh was paid through utilizing these credit, so 9 lakh will be transferred from CGST account to IGST account. These intergovernment account settlement are done by the government. Yes, actually these are done. And from Maharashtra state government, 9 lakh will be transferred to IGST fund. So, sir, here funds are 0. Here again the funds are 0 with the state government, and 18 lakh are transferred to IGST account, and 2 lakh are paid by Mr. B to the IGST account. So total funds of rupees 20 lakh are here in IGST account. CGST account fund position is 0. SGST Maharashtra state government fund position is 0. Okay, funds are in IGST. Now, Mr. T of Tamil Nadu. Mr. T of Tamil Nadu, again suppose, sold these goods to a person who is located in Karnataka. Sir, a person who is located in Karnataka, sir, suppose Mr. K. Mr. K is located in Karnataka. Sir, Mr. T has sold the goods to Mr. K in Karnataka. Again, IGST will be charged. Suppose IGST of rupees 25 lakh is charged. So, for paying the liability of rupees 25 lakh, sir, he will use 20 lakh is the IGST ITC, because on purchase he had paid the IGST of rupees 20 lakh, and remaining 5 lakh will pay. Sir, 25 lakh Mr. T has collected from Mr. K, and he has paid rupees 25 lakh to IGST account, 20 lakh through IGST ITC only, and 5 lakh through payment only. Okay, so already 20 lakh were there in the IGST only, so IGST to IGST settlement, and 5 lakh amount is paid by Mr. T to IGST account. So funds are 25 lakh in the IGST account. Okay, now what's happening? Again, this Mr. K of Karnataka sold the goods to Mr. Okay, Mr. R of, suppose, Rajasthan. Sir, Mr. R of Rajasthan, Mr. K of Karnataka sold the goods from Karnataka to Rajasthan, and goods are there in now Rajasthan. Sir, again he will charge IGST. Okay, I'll tell you the example. More simplified example I'll give. Suppose he has sold the goods to Mr. N of Karnataka only. Okay, now happy? Okay, sir. Now, Mr. K of Karnataka has sold the goods to Mr. N of Karnataka only. Again, it is intra-state supply, and he will charge CGST and SGST. Okay, sir. He will charge. Sir, I'll do one thing here only. Okay, so it will be more easier to understand. Okay, sir, Mr. K has sold the goods to Mr. N of Karnataka. Again, sir, CGST and Karnataka SGST will be charged. Suppose 30 lakh was the tax, so 15 lakh is the CGST and 15 lakh is the Karnataka SGST. Okay, done. So Mr. K has collected the tax of rupees 30 lakhs from Mr. N, and now it is the liability of Mr. K to pay the tax to the central government for rupees 15 lakhs and 15 lakh to Karnataka state government. And on his purchases, he has already paid rupees 25 lakh as IGST. So point comes whether the credit of IGST will be allowed to pay the liability of CGST and SGST. Answer is yes. So how he will pay? Sir, he is free to use the IGST ITC for payment of either CGST or SGST, or he can use proportionately, or he can use first the liability of CGST or SGST as the case may be, no worries. Suppose entire 15 lakh ITC he is using of IGST towards payment of CGST, and sir he was having ITC of rupees 25 lakhs, out of which 15 lakh he is used for payment of CGST liability. Now remaining 10 lakh he will use ITC for payment of SGST, which is Karnataka SGST, and remaining out of 15 lakh 10 lakh he is paid through credit. So remaining 5 lakh he is made through bank. He has made the payment. Okay, sir, done. And now suppose this Mr. N is the end consumer. One moment. Sir, first of all, how the revenue will flow here? The funds of rupees 25 lakh were there in the IGST account. At the moment when this IGST ITC was used for payment of liability of CGST, this 15 lakh will be transferred from IGST account to CGST account. Done. And at the moment when IGST ITC is used for making payment of Karnataka SGST liability for rupees 10 lakh, then IGST ITC of rupees 10 lakh will be transferred to Karnataka SGST account. Now the funds available in IGST account is 0, because out of 25 lakh, 15 lakh is transferred to CGST account and 10 lakh is transferred to Karnataka SGST account, and remaining 5 lakh Mr. K has paid to the Karnataka state government. So ultimately funds are 15 lakh. 15 lakh funds are there in CGST account and 15 lakh are there in Karnataka state government GST account. No payment is there left in IGST account. And suppose this chain ends here and Mr. N of Karnataka is the end consumer. That's it. Transactions are over. So ultimately, who got the revenue? Tell me. Sir, ultimately, when the goods or services reached to the end consumer, total tax was 30 lakhs. Out of 30 lakhs, 50% went to central government. Done. And 50% went to which state government? Karnataka state government. Sir, fundamental of GST was 50% revenue will be of central government, 50% will be of the state government. But in case of interstate transactions, sir, 50% will be the revenue of which state government? This is the question, and answer practically we have seen that the revenue will go to Karnataka state government. Sir, goods were manufactured in, see here carefully, goods were manufactured in Maharashtra. See here, goods were manufactured in Maharashtra. From goods of Maharashtra to goods were sold to Maharashtra itself. Then goods went from Maharashtra to Tamil Nadu, Tamil Nadu to Karnataka, and Karnataka was the ultimate end consumer. And you tell me, sir, ultimately goods were manufactured by Maharashtra state government. These went through Tamil Nadu, and ultimately goods are consumed in Karnataka. So who ultimately, which state government got the ultimate revenue of the state of the SGST? Sir, Karnataka state government got the revenue of SGST. No doubt 50% is the revenue of central government. No worries on that. But remaining 50% went to which state government? Karnataka state government. So ultimately, if we talk about the entire country, if we talk about the GST as a whole, sir, interstate transaction will definitely take place. And revenue will go to which state government? Sir, the state government, which is the people of the state government, which are ultimately consuming the goods. That's why this GST is called destination based consumption tax. It is called destination based consumption tax. I hope you got the entire fundamental behind this line, this language, destination based consumption tax. You tell me ultimately which state government got the revenue? Karnataka state government got the revenue. That's why, sir, what is the destiny of the goods? The destiny of the goods was Karnataka. Sir, where the goods were ultimately consumed? Karnataka. Who got the revenue? Karnataka. So this tax GST is called destination based consumption tax. This point arose before the introduction of GST. Sir, when all the state government delegates were discussing, then This point was discussed in detail, and sir, and it was discussed that, see, after the introduction of GST, the state government, which is having more consumers, consumer-based state government will get the more revenue of GST. But what happened in pre-GST regime? What used to happen? You know, before GST, when sales tax was there, VAT was there, whenever interstate sale was taking place, there were charged a tax which is called CST, Central Sales Tax. And you know, the credit of CST was not allowed to the buyer. Suppose you have purchased the goods from Maharashtra to Tamil Nadu, then CST will be charged and no input tax credit of CST will be allowed to the person who is buying the goods in Tamil Nadu. So CST, whatever CST was collected from the customer, Tamil Nadu customer, this revenue of CST and VAT was there with the Maharashtra government only. Means, if in the pre-GST regime, the person, the manufacturing based state, the state which was manufacturing the goods was getting more revenue, because revenues were not getting passed from one state to another state in the pre-GST regime due to CST, because credit of CST was not allowed to the customer in the other state. So before GST, the manufacturing state, the states which were having more manufacturing hub, the manufacturing based states were getting more revenue as compared to consumer based states. But sir, हिंदी में बोलते हैं ना, किस्मत बदलते वक्त नहीं लगता, किस्मत बदलते वक्त नहीं लगता, किस्मत बदल गई इन द GST. Sir, time changes, fate also changes. And sir, before GST, it was manufacturing based states who were getting more revenue, but after GST, consumer based states will be getting more revenues. So all the manufacturing hub states, the states which were having more manufacturing units, denied that no, we don't want GST. We are not agreeing the GST, service tax, excise, VAT is the good. We don't care about the country. We don't care about the development of the country. Ultimately, we are losing the revenue. Why would we agree for GST? Their point was also valid. Now what is to be done? So again, central government came out with an idea that don't worry, we will compensate the losses which you will be incurring due to introduction of GST. So central government framed another act which is called, sir, GST Compensation to States Act. You might have heard its name. GST Compensation to States Act, which is called GST Compensation Cess. Government charged additional tax which is named as GST Compensation Cess on motor vehicles. Sir, tobacco based goods you might have used. Tobacco, no, don't use ever. Sir, on certain cigarettes, sutta, sir, don't ever use it. These are very dangerous for the health. Sir, government has charged this additional tax named as GST compensation cess on these certain goods. And whatever GST compensation says, government will be collecting out of those sales. This is the separate fund which will be used to compensate the loss incurred by those states which lose their revenue due to introduction of GST, and government framed separate act. That how they will settle the account? See, 2015-16 financial year, 2015-16 they have taken as the base year, and whatever VAT revenue, sales tax revenue all the states had, they have mentioned it. Clear? And now government will compare the revenues of the respective each state government after introduction of GST. Whatever SGST revenue each state will have, government will compare that revenue with the revenue of the weight before the introduction of GST, keeping the base year is 15-16 financial year. But all state government said that, sir, inflation is there, na, so there should be some incremental revenue also. So government added the incremental revenue of 14%. 14%. So whatever is the revenue of weight of each state government for the financial year 15-16, 14% will be added. In the next year, in this revenue, again 14% will be added. Again cumulatively 14% will be added each year, and government will compare the revenue of state government with this calculation. And if any of the state government is having lesser revenue under GST as compared to that 15-16 year plus 14% revenue, then out of this fund, that loss will be compensated and that fund will be transferred to the respective state government. And this new act, GST Compensation to States Act, was framed. And sir, this is another tax which is charged on some goods, not on all goods. Yeah, no doubt this act is not there in your syllabus, but yeah, majority of the idea behind this act I have given you. I hope you got the entire point, sir. Clear? This is the GST Compensation to States Act, and manufacturing based states who will be having loss after the introduction of GST will be compensated using this act. And initially when the GST was introduced, this Compensation Act was framed for 5 years, and government promised that we will compensate your loss for next 5 years from the introduction of GST. But yes, now they have expanded the scope of this act, and till 31st March 2026 this Compensation Act will be governed, and the revenue will be compensated till 31st March 2026. I hope you are getting the fundamental. And sir, one nation, one tax, one market. To introduce the one nation, one tax, one market, see total 35 acts were framed. Total 35 acts were framed. One is CGST, 31 are SGST acts, one is UTGST, one is IGST, and one is GST Compensation Cess. Clear? GST Compensation to States Act. Clear? But as far as your syllabus is concerned, CGST is there in your syllabus and IGST is there in your syllabus. And yes, if you read the CGST Act, automatically 31 acts because absolutely same provisions are there. And one UTGST is there. See, in UTGST Act, simple, only few sections are given, and basically in UTGST Act it is introduced to levy the GST in the Union territories also. If you are selling the goods in Union territories, intrastate supply you are selling, then UTGST will be levied, and otherwise it is clearly mentioned in the UTGST Act that all the provisions of the CGST Act will apply in UTGST also. GST Compensation says, I have already told the more or less entire act to you, because only the how the losses will be compensated and how the revenues will be calculated, 14% factor, I have taught you already. I have already given you the idea, and rest it is mentioned clearly in the GST Compensation to States Act that all the provisions of the CGST Act will apply here also. Clear? Although these are not in your syllabus, but just I have given you the idea. So if you have read CGST Act and IGST Act, then more or less you know the entire picture of GST. Clear? Done. So these two acts are there in your syllabus. But yes, sir, I hope you got the entire fundamental that how GST was introduced and why GST was introduced and how these 35 acts are framed. But you don't have to worry, because only CGST Act and IGST Act, if you have read, then entire GST will be in your control. Clear? Done. So, sir, till now, what we have read? Sir, why GST came into existence? What was the lacuna in the previous laws? How the credit was allowed? 10 ka credit kyun mila? Why the credit of rupees 10 is allowed? See, Senvet credit and VAT credit, same fundamental will get continue in the form of CGST and SGST. See, we have read that Senvet credit can't be allowed for payment of liability of VAT and vice versa. Same, CGST can't be used for payment of liability of SGST and vice versa. Clear? So, flow of revenue between the state governments. Sir, how the revenue will be distributed and how these acts are framed, I hope entire picture is clear in your mind. Sir, in the next session, from the next session, we'll be starting with the GST Act, CGST Act, and provisions of the CGST will be beginning with the next session. I hope you enjoyed this session and the fundamentals behind introducing GST is clear in your mind. Clear? Done. Sir, from your book, we'll begin with the chapter number 2 from the next session. But yeah, this was a basic fundamental behind introducing the GST, benefits of GST, etc. Sir, so we'll be beginning with chapter number 2 from next session. But yeah, sir, basic fundamental. It was my duty to give you the knowledge regarding the basic fundamentals, so I have given you. Clear? Done. Sir, what we all will do in regular lectures, regularly whatever I am mentioning here, whatever I am noting here, what we'll do, I'll give you the time to have a click of these slides. You can have a photograph from your mobile phone of these slides so that you can copy it in your notebook after the lecture, so that time will be saved while going through these lectures. Okay, so this is a very good example due to which you will be able to understand why the credit of rupees 10 is allowed. So please copy it. Please have a click of this slide. If you don't want to see me here, okay, sir, I will hide myself from your life. Don't worry. But still, I'll be there in back of your mind always. Okay, please have a click of this slide, please, sir. Daily we will do this same practice. No need to write anything while we are reading the lecture, because while studying the subject, you should have entire focus here only on my words. Done. It is there in the book itself, which all taxes got subsumed in GST. Sir, 35 acts are framed in GST. Done. Sir, this is a very good fundamental. One very good illustration is also given in the questionnaire regarding this flow of revenue from one state to another state. Who will ultimately get the revenue? Have a click of this slide and please copy this in your notebook very carefully. Done. Okay, sir, from your summary book or main book, just go through chapter number 1 and don't mug up each and every word of that chapter. Sir, in chapter number 1, only importance of GST, benefits of GST, and Indian constitutional validities are given. Just go through just a single reading of that chapter, and basic fundamentals I have taught you. Clear? Done. See you in the next lecture. Mahol, all the best. Take care, and most importantly, enjoy the studies, which is the key point to success in your life. Thank you so much. Bye bye.